All right, let's talk about something huge happening in the gaming world. What if one of the absolute giants, I'm talking about the company behind Madden, The Sims, all of it, just vanished from the stock market? Well, that's not a what if anymore. It's exactly what's on the table for Electronic Arts in a deal so massive, it's going to rewrite the record books. So let's dive into this $55 billion game. Okay, first things first, let's just stare at this number for a second. $55 billion. I mean, to even try and wrap your head around that, that's more than the entire GDP of some countries. It's not just a big number, it's a statement. A number this huge signals a massive, massive shift in the gaming industry. And look, this isn't just big for gaming, it's big for, well, for history. We're talking about what's set to become the largest private equity buyout of any public company ever. It completely shatters the old record, which was a $32 billion deal for a utility company called TXU, and that was way back in 2007. So yeah, this is a whole new level.
All right, so for our first section, let's get into the nitty-gritty of this historic deal. What does it even mean when a company like EA gets taken private? Let's break that down.
You know, the easiest way to think about it is like your social media profile. When a company is public, its profile is wide open. Everyone, the public, shareholders, can see and judge every single move, every single quarterly report. The scrutiny is constant. Going private is basically like flipping that switch to private. Suddenly you can make big moves, plan for the long term, and you don't have to stress about what the stock market is going to think tomorrow morning.
Okay, so here are the nuts and bolts of the deal. The company, of course, is Electronic Arts, or EA. The total value is that mind-blowing $55 billion. That breaks down to $210 per share. And the type of deal is what's called a private equity buyout. That's just a fancy way of saying a group of investors got together, pooled a whole lot of cash, and are buying the company to take it off the public market. So that's the deal itself. But that brings us to our next big question. We know what is happening, but let's talk about who it's happening to. Who exactly is Electronic Arts? Let's take a look. I mean, EA has been a public company for a long, long time, 36 years to be exact. It was founded way back in 1983 by an ex-Apple guy, Trip Hawkins, and it went public with its IPO in '89. Andrew Wilson, the current CEO, has been in charge since 2013. But here's the kicker, and maybe the biggest reason we're even talking about this deal today. If you look at the last few years, their revenues have just kind of stalled out, you know? They're stuck hovering between 7.4 and 7.6 billion. They're not really growing. And of course, we all know EA. Their cultural footprint is just massive. We're talking about games that are global phenomenons. You've got the total sports dominance of Madden NFL and what used to be FIFA, now EA Sports FC. You've got the huge battles of the Battlefield series, the absolute icon that is The Sims, and the Battle Royale monster, Apex Legends. Seriously, these aren't just games, they're household names. The value here is absolutely immense. And that really brings us to the core of it, right? You've got these incredible franchises, but your revenue is flat. So the pressure from Wall Street to hit those quarterly numbers, it becomes intense. This quote really nails the business logic here. Going private lets EA step out of that pressure cooker. It gives them the breathing room to retool, to shake things up, to invest for the long haul without having to worry about what investors will think next week. Okay, so that's the why. But that leads to the next huge question, right? If EA is getting bought for $55 billion, who on earth has that kind of money? Let's meet the investor group behind this whole thing. First up, we have the Public Investment Fund of Saudi Arabia, better known as the PIF. And if you've been following the business world, you know they've been making huge moves everywhere, especially in gaming. This isn't some random investment for them. They were already the biggest insider stakeholder in EA, holding almost 10% of the company. And they've been snapping up stakes in companies like Nintendo and buying others outright. They're all in on gaming. The second key player in this group is a firm called Affinity Partners. And this private equity firm is run by a pretty well-known name, Jared Kushner, who, as you probably know, is the son-in-law of former President Donald Trump. And finally, rounding out this trio is Silver Lake Partners. Now, these guys are heavy hitters in the private equity world, especially with tech. They've got a long history of massive, high-profile deals. We're talking companies like Skype and Dell. They were even involved in that whole TikTok situation a while back. So a deal of this size, yeah, this is definitely their wheelhouse. But here's the thing, a deal this big, with this particular group of investors, it's not as easy as just writing a check and shaking hands. There's a really big hurdle they have to get over first,
a regulatory one.
And that hurdle has a name, CFIUS. It stands for the Committee on Foreign Investment in the United States. And you can think of it as a government gatekeeper, basically. It's this committee led by the Treasury Department, and its whole job is to look at deals that involve foreign money, like, say, from the Saudi PIF, and make absolutely sure there are no risks to U.S. national security.
Okay, and this is where, according to the sources, things get complicated. The approval process isn't just a rubber stamp. There are a few things at play here. First, obviously, the deal needs that green light from CFIUS. But second, you have a key investor, Jared Kushner, who has very close ties to the Trump administration. And third, former President Trump has had his own business dealings with the Saudi-backed LIV Golf League. So these are the sorts of potential conflicts of interest that regulators are definitely going to be examining very, very closely. So, with all of that on the table, the money, the players, the politics, let's zoom out for our last section here. What does this all actually mean for EA, for its shareholders, and maybe most importantly, for the future of the entire gaming industry? Well, over on Wall Street, people are definitely debating this one. On one hand, you've got analysts saying, hey, wait a minute, $210 a share is actually too low. They think it undervalues what EA could be worth down the line, especially with a new Battlefield game coming up. But then, on the other side of the argument, you have analysts who say it's a great deal. It gives shareholders a guaranteed payout right now for a company whose stock, remember, hasn't been growing all that much.
And you have to remember, this deal isn't happening in a vacuum. It's part of this huge consolidation trend that's been sweeping through the gaming industry. I mean, just think about Microsoft's unbelievable purchase of Activision Blizzard for nearly $70 billion, or all the other big acquisitions by companies like Sony and Take-Two. These mega deals are totally reshaping the landscape, and all that power is ending up in the hands of fewer and fewer massive companies. So what's next on the checklist for this to actually happen? Well, there are 3 big steps. First, EA's own stockholders have to vote and say, yes, we approve this sale. Second, the deal has to pass that super critical CFIUS security review we just covered. And if it can clear both of those hurdles, then everyone expects the deal to be officially done and dusted in the early part of 2027.
And all of this leaves us with one last really important question to chew on. When a gaming giant like this goes private in a deal this massive with this specific group of investors, who really wins? Is it the shareholders getting a quick payout, the investors playing the long game, or is it us, the gamers, who actually play all these titles? That's the $55 billion question, isn't it?